Bring in Mizuho software analyst Gregg Moskowitz. And Gregg, we're all familiar with that dynamic. You know, all these growth software companies that have had their valuations come in because of rates, because maybe they got a little too extended. Right now, though, as you sift among the potential winners and losers, where does it bring you in terms of the types of software players, I guess the kinds of end markets they serve? What do you like here and not like?
Yeah, thank you, Mike, for having me. So I think it's important, and it's a very important question to distinguish where software vendors are playing, what is going to be a priority. We all know that there are macro-related pressures. IT budgets are certainly going to be more challenged in 2023 than they were in 2022. Now, ServiceNow, we do think, is one of the better placed, one of the better positioned vendors. They stumbled quite a bit in Q2. Since that time, they revamped their go-to-market. They got in front of decision makers more quickly. They articulated their time to value a little bit more clearly, and we've seen them get more deals over the finish line, which resulted in a better Q3 than expected. What we published this morning is indicative of a continuation of that. In other words, yes, there is hesitation from some customers, but by and large, ServiceNow, we are hearing, is continuing to be in favor on a relative basis when it comes to spending on IT and spending in software.
And just to turn quickly to Microsoft, we are going to get results from them next week. Clearly, it's kind of the huge stable one in the business. Also had some valuation compression. How is that set up?
So, in our view, the setup is a little less clear. Now, if you were to look at public cloud-oriented data points, the hyperscalers, Azure, but also AWS and GCP, they clearly have had a downtick over these past few months. And so that has brought a great degree of concern as it relates to, from the investment community, as it relates to these companies, and particularly in my space, Microsoft. And so the expectations have come down quite a bit. What's interesting is Microsoft guided to a disappointing level for Azure this period. So 37% constant currency growth, that is a deceleration of 5 points from the 42% they did the prior quarter, and that in and of itself was a disappointment. There are some investors who think they're going to miss this target. We believe it is likely to come in line. That is not anything spectacular. It is reflective of challenges, but I do think it's important to mention that while many customers are cutting back, they are optimizing their public cloud spend, there are also a number of other customers who are actually pushing forward, doing more with digital transformation, putting more workloads into the cloud. And so there is a partial offset, and so that is, again, worth bearing in mind. Microsoft has gotten significantly weaker, as you know, over the past few weeks. At this point, it's trading a little bit less than 20 times our calendar 24 PE. And so, so that is interesting, particularly for medium to long-term minded investors that can look out a bit beyond all of the noise and all of the challenges that we're facing right at this moment.
Sure. Yeah. And I guess the very long-term trends have not really been disturbed with this little downturn. Gregg, appreciate the time. Thank you very much. Gregg Moskowitz of Mizuho.